here we go. All right, Boris, I will make you the presenter. Looking forward to hearing your voice, and if you want to share your screen, you have the capability of doing it.
Testing 1, 2, 3, 4, 5.
You're good. You're good. Good test.
I'm full of jive. Okay. Sounds good, guys.
Hi, Boris.
How are you guys?
Hi, Boris. Can you hear me?
Yep, I hear you very well. I hear you.
Okay, so I hope you had a great birthday, Boris.
I did. Thank you very much. You know, us Geminis.
So are you like me that, you know, we're Memorial Day kind of babies and we celebrate our birthday the whole weekend?
Yeah, not really, but yeah, I mean, you know, I love having my birthday end of May. It's like a perfect time to have it, you know.
Did you turn 39 like me?
I did.
All right, so great to have you with us, Boris. Thanks so much for taking the time to talk to us and share some of your views with the FACE community. You know, I always enjoyed interviewing you, and I know from having interviewed you, and you know, you do a great job on CNBC when they put you on, that you kind of have a style where you work off of themes. And I'm wondering, since we're in June and the first half is almost done, what themes Boris Schlossberg is looking forward to going into the second half of the year?
Well, you know, the big theme in the dollar that everybody is focused on. Oh, look at euro dollar. Hang on a second, guys. I gotta lay out some few trades here. Euro dollar taking out 112s here.
Oh, you're like that commercial on CNBC. Oh, hold on. I have to do some hedging trades.
No, we gotta lay out. Oops, hang on a second.
You know that commercial I'm talking about? Some lady meets a guy in the restaurant and goes, "Oh, they shot down the NATO jet." Hold on a minute. I have to do some hedging trades.
Oh yeah. I do know the commercial. Now I want to lay out the 12.15s in the euro right now.
Okay.
Wow, we're really rocking over here. This is nice. Euro is just screaming by all morning long.
Yeah.
So this is good.
So let me guess by your excitement that you think that the breakdown in the dollar is real and there's plenty left to the downside in the dollar, plenty left to the upside in euro?
I don't know. I mean, the honest truth is I don't know. I mean, you know, the euro, the thing that's very impressive about the euro, let's take a look at the euro here on a dailies, and I'll just tell you sort of how I'm viewing the whole situation. Let's go to the dailies. Just bear with me a sec.
Sure.
So a couple of very impressive things about the euro, and today is one of those kind of days where I think could be what we call a strong volatility day. Euro never filled the gap.
Yeah.
We have a runaway gap, as you well know, Dale.
At least a breakaway. We need one more gap. The way I was trained classically, Edwards and McGee, your first gap like that is a breakaway. Runaway would be if we had another gap during this move, which could happen. So, okay. But anyway, you could call it runaway. What's the difference? You know, I'm being a technical analyst right now. Call it whatever you want.
It's an unfilled gap, which is bullish.
Okay.
And unfilled, and the longer it goes unfilled, the more bullish it is. What's furthermore is that, you know, we traded back down and held the 108.50 on the corrective move, right? And then we haven't even been able to come back down to 110s. And that's how positive the sentiment has been. The fundamental story behind here is ECB may be moving towards a more tightening posture, right? There is talk that they may even curb quantitative easing as early as June. which would be very interesting. Certainly would be very, very bullish given the euro. The flip side of it is the dollar doesn't seem to be going anywhere. Look, today we had, PCE data, which was in line, right? We were looking for PCE data to come in at 0.2, turn positive. That's presumably should give the Fed a little bit of sucre for the rate hike. But the year over year is 1.5%. This is hardly torrid inflation. And the Fed is, everybody knows the Fed is full of crap in terms of arguing that we require rate hikes. The Fed is only hiking rates right now so they can unhike them in case we have a recession, right?
Agree. Well, I've been saying that for a long time. So they want to build up their war chest in case they need to lower rates again.
Right. So fundamentally,
will they do it in June? Will they do it in June?
At this point, they've painted themselves into such a corner.
Well, why not do it with the S&Ps at 2,400? It's a great time.
What I'm saying is they can't afford not to do it. They would really not care about it. The more interesting thing, though, is the market is really looking past June. The more interesting thing is if they hem and haw and say, no, we'll be data dependent for September. That could push the dollar even lower. So the euro is really rising on two interesting dynamics. One, basically the situation in Europe has actually improved significantly since Macron has won. There is a lot of hope now that Europeans are going to generate better growth. And
he does have one arm in a cast though now.
What do you mean?
After his handshake.
Oh. I think I think him and Trudeau have basically figured it all out.
Yeah.
And what was I going to say? The other component is that the U.S. bullish case, which was three rate hikes until the end of 2017, is just not as clear as it seemed to be. So you have all of these anti-dollar flows that are taking shape. And the thing about them that I think is impressive here is that they're not going away. Like it seems like this sentiment, this anti-dollar sentiment, is quite strong. We just tested at 1,200, came off of it. But I have a feeling we're gonna press further a little bit as the afternoon goes.
Are we coming? I think it's Luis Yamada. The longer the base, the bigger the launch into space. And the euro really based for a whole year, didn't it?
Yeah, it did.
That's a pretty big base.
A lot of people were betting on the fact that we were going to
go under parity.
Go under parity. And I think, of course, the shorts got really, really badly caught on this move. So can this squeeze out the 114? For sure. I mean, we can look at on the weeklies here. The really big trade, the flip was, where is this thing? I'll show you. It was
we're testing the election day high in the euro. That was November. That 1330.
No, it's not. It's what was the flip here? Sorry, I'm looking.
117.
No, it wasn't even that. It was this. Was that the? Was that the ECB presser? Or was this the ECB presser? I'm trying to understand. 260. Oh no, I'm going. This is it. Sorry, this was the ECB presser. This is the ECB presser where Draghi just flipped the euro viciously to the downside. Yeah. And the high here was around 1,300, right?
And that was also the election day, Boris.
Was that election day?
Look at the date.
Election day, yeah. It was election day too, right?
Yeah.
So those two things, that's right. For the euro to really recover the election day high of 1,300, very, very reasonable to think that's possible.
Yes.
So we could have that happen.
Yeah. Okay. So this could end up being a long, if you look at a weekly, why not consider retracements from the high at 140 down to 103? That even if it is a bear market rallies could take it to 120, 117, 120, I think would be about 38% back of that big decline from the Draghi bear market.
They can, but but I'm very leery of projecting so far ahead. I'm sort of I project always I would generally project the next day ahead, but even on a longer term basis, I don't think I could see more than 300-400 points ahead of me without any reasonable compromise.
That's understandable.
Another thing that people in your room might find interesting, one of the things that we look at and I really like as a signal, this is a really pure technical signal that is very easy to visually understand. This is a weekly chart, and it works on the weekly even better than it does on the daily. We call the vol, sorry, just a sec, let's let the ambulance pass by. We call this the vol candle, and the volatility candle has a couple of very interesting characteristics. First, it has to be about 150% or more of the prior 3 candles. So it means there's got to be a lot of price, a lot of big expansion of range in the candle, right?
Interesting.
And secondly, it must close on the high or close on the low to give you a clear indication of further price movement in that direction. So here's a good example of a volatility candle, right? Very large range, close on the low on a weekly, gives you quite a lot of movement. The next week, even though everybody thinks, oh, it's the exhaustion bottom, it actually has quite a long way to go on a weekly basis to come back against it. Here's another good example of a large volatility candle. These are weekly signals, which tend to be even better than daily signals, but of course we can see them on the daily signals all the time, and we like to trade those on the daily signals as well. So if you look at the euro, the daily signals, the big breakout was this breakout on May 16th, right?
Yeah.
Which was a big volatility candle, and there was a big volatility candle here on May 19th, which gives extension. Now, the art of the trade, of course, is to figure out how much further extension do you get. Where do you go? We generally like to trade it on a daily basis with 40 target and a couple of scale backs against it. So in other words, if we're buying the close, we'll buy and if we have a 40-point target on it, we'll buy 40 behind and then 25 behind and a full stop at 100 underneath it, because very often it will retrace and then go take the direction back up again. So you have to be very skillful. Trade management is a very component of this kind of a structure, but generally it's just a pure directional signal, very, very powerful signal. And so today,
well, that's a new pearl to me, a volatility candle that's 3 times the range of the prior. How many candles? 3 candles.
Yeah, and again, it's more of a science than there's an art. You can. The point is that who was it? Justin Porter said it's just like pornography. When I see it, I know it when I see it. It's kind of a thing. It really sticks out very clearly at you the moment you see it. Pound is notorious, because Pound, by the way, is notorious for doing this and then screwing you royally for a while. So here's Pound, right? Huge volatility candle. This is when May calls her election, right? And then the other thing is you have to be super patient with it, because it will spend sometimes 3, 4, 5, 6, 7 days consolidating before taking on further extension of the move, right? So a couple of days ago, it actually sent a down signal. Pound sent a sell signal on Friday. But we didn't trade this because, first of all, we know that Pound retraces, right? But now, like Pound coming in at around 29, probably a pretty decent sell, because this sell signal is still very legitimate. The only way it becomes illegitimate is if the high of this candle, which is about 29.50, gets taken out. Then,
that's what I was saying today. That was a line in the sand for a different reason, which makes it even more important to me that you use a different method and come up with that line in the sand. Thank you. Yeah, nice.
But this, I think, for people who are very visually oriented like I am, this gives it a very simple, this is a mathematical structure, but it's, it's expressed visually, so it's easy to see. You can see this, you can see these kind of moves all the time. You have lots of low volatility, big breakout, right? Lots of volatility. Here's a breakdown to the downside, and it takes a long time, and you got to be patient. You got to trade against it, right? But as long as it doesn't break the top, you got to have faith and sell against it, and it will come back, and you can resolve the trade positively.
So the two signals you've given us augurs well for a continuation up in Euro Pound.
Yeah, I mean, I haven't looked at the euro pound.
Yeah, it's been roaring.
But euro on the crosses has just been a monster. So euro pound today is compressed a little bit. But yes, I mean, euro pound actually sent a buy signal on Friday.
Yeah, right.
And now it's just retracing against it. So the invalidation of that would be around
6.5.
Yeah, 16.5. Yeah,
Okay.
yeah, about 30 points away from here, somewhere around there.
Okay.
Is that would invalidate?
Where are you at on the yen? You have a view?
Yen is,
It's okay to say no because it is.
Here's the thing about the yen that's interesting. Here's the thing about technical analysis that I find fascinating. So let's go to a 5-minute chart, right? So a really good rule of thumb is if news is positive, but price action is negative, beware of the news. And so what we had today was a classic example of decent PCE. Everything should be, this is all hunky-dory, confirming that these with, personal income, personal spending were all good, right? And yet we couldn't beat the 5-minute candle yet, right? As a matter of fact, we're unwinding it right down to the lows here, right?
Yeah.
So
the whole move was negated.
The whole move was negated, and that's that's worrying to me because if you look at the yen on a longer-term basis, it still looks pretty terrible. This is the daily candle. As a matter of fact, the yen is still operating under this very, very strong sell signal that we saw on the 17th of May. And the low of that sell signal is around, 1080, right? We went all the way down to 1023. But to me, it's the 1000 level, the 110 level, that because the 110 level is sort of like that level that's yen looking like it wants to actually fill the gap. That's sort of where everything ties in together.
Nice. And let me ask you this. Any chance that someday in this century we'll see a 10% correction in the S&Ps?
Yeah, I think sooner than you think. I think everybody, I've never seen a sense of complacency greater than I have in the equity market. As a matter of fact, I think we could have a vicious correction. For things that nobody can understand. South Korea launches something that actually hits Japan. They came in within 300 miles of hitting Japan today. Who the hell knows? Equities are grossly overbought. There will be some excuse that none of us can know ahead of time that could trigger a pretty steep sell-off. And there's everybody right now is betting on the fact that we're going to get a massive tax cut, and that's not even remotely going to happen. So
how about impeachment?
That could happen, although I doubt that's going to happen. Also, I think we get neither. We get the worst of both worlds, which is a terrible stalemate with little another dysfunctional government, even though the Republicans have both houses. Right, because they're hobbled by the investigation, which is only going to get a lot worse. And the other thing that I think is starting to scare the market. I mean, today's commentary by Trump about Germany, which is Germany just sort of let everybody understand is literally not only the biggest ally that we have, but the single most productive member in the Western alliance. Germany has 1/4 the population of the United States of America and exports more goods than U.S. does, $2 trillion worth. It has 1/2 the population of Japan and exports more goods than Japan does. They don't do it because they somehow bribe people into buying their stuff. They do, and they do it with stuff that is extraordinarily expensive. They don't sell cheap stuff like China does. So what that means is that they have extraordinarily high production values and technology that allows them to essentially compete in the world against some of the toughest barriers in the world, including the fact that they pay their workers $50 an hour. So if you think about all those factors, instead of becoming enemies with Germany, we should just be emulating everything they're doing 100%. The fact that we now taken our best ally and turn them into an enemy is very, very bad on a lot of different levels. And, you know, to me, now everybody knows I'm a raving liberal, so I really don't care. But to me, as a Russian, even if I didn't think that Trump was a Russian spy.
Yeah, they're doing cartwheels.
Like, let me explain to you, like this tweet almost, where's this tweet? I got to find this tweet. Hang on a second. Let me just find it. My screen is, okay. So let me find him.
The tweet about the cars?
No, this tweet right over here. Where's, I just want to find his tweet. This tweet was...
Yeah, he has more followers than us.
Okay, where is this? Here it is. We have massive trade deficit with Germany, plus they pay far less than they should for NATO military. Very bad for us. This will change. So if you sort of understand anything about geopolitics, you understand that Russia's biggest enemy in Europe is Germany, which used to be, which to this day should
historical.
Not just historical, but right now, because they've been the bulwark. So if you're Putin, what would you like more than anything in the world to basically create complete and total discord between two of the most powerful alliances in the Western Alliance, right?
Yeah.
This, to me, screams, I'm a Russian spy, more than anything he's ever said in this world. This is the most treasonous thing I've ever seen the President of the United States say in my life, because this is exactly what Vladimir Putin wants him to say. So I don't know where this goes. I don't know how it's going to play out. But of all the things he said, this one, even though it seems so innocuous, was the single most treasonous thing I've ever seen the United States president ever say in my life. And I say it as a former Russian, that this is, if Putin didn't recruit him, he couldn't have recruited a better spy than to have someone do and say this right now and sow discord. So I don't know. That's why I'm very dubious about the market holding on the highs of this point.
Okay. Any views on, say, bonds? We've seen a big shift from the shorts, got real short, and they got creamed, and now they're net long bonds. I've been watching TLT. Is there some fear money going to take TLT maybe back up towards 130? That's where they really accelerated to the downside after the election. Do you have a view on bonds? Bonds are, I'm not as
tough call. I'm not as bullish bonds as some people are, but I definitely think that yields. I mean, there are people that are calling for 2% yield. I think that's really extreme. Not impossible,
okay.
but extreme.
Okay. I know last year you liked gold.
I did like gold, although my favorite new gold is Bitcoin. It's gotten.
Oh, okay.
But I think Bitcoin is the new gold. And
all right. And Ethereum is the new silver.
I guess so. Ethereum is the new silver, right?
Okay.
But you got to kind of have to respect that. That.
Have you traded it? The volatility. Huh?
Yeah, no, it's insane. I mean, it's insane. I haven't traded, but I do think that the fact that Bitcoin is actually rising so much is an underlying expression. I mean, it's clearly a bubble too, but it's also an underlying expression, I think, of dissolution.
Not trusting the dollar, as diversification away from all fiat currency.
Correct.
And political political control. Whether it's China or any other country.
Right.
Okay.
And it seems to have like a universal appeal across a lot of different regions. It's not just U.S. buyers that are buying it; it's Chinese buyers that are buying it, and stuff like that.
Okay, Boris, do you want to show your website, yours and Kathy's, and the best place for people to follow you and keep in
So
touch with what you're doing?
There are two things you can do. You can obviously come join us and trade with us every single day. Actually, hang on a second. This is my Slack room. I'll show you actually my Slack. I'll show you our Slack room as well. bkforex.com is our website, and you can just come in and feel free to either get our courses or get our trading signals, and feel free to join us. It's only $59 to try us for a week, and you can see if you like us. If you want to read my research, you can get it over here at, let me get the link. bkassetmanagement.com. That's where I publish my research, and you can just simply put your name on the list right here. Just put your name on the list, and you'll be able to get it every single day.
Okay.
So,
do you manage funds at all? You have an RIA or anything like that?
No, we do not manage any funds.
Okay.
And we're very, very glad not to do that.
Okay.
We do have a live chat room. As you can see, everybody hangs out with me, and we all trade all day long. So this is one of the things that happens when you get into our signals room.
Nice.
You can come trade with us, and we do lots of different strategies and a lot of different ideas.
I appreciate.
And you can see that like we all of our trades come in and out, into like live. They're connected directly to my account, so you can see they're all they're all posted and traded instantaneously. So it's very cool, very transparent, very, very cool for everybody.
Yeah, it's fun. Is that a new dimension to your model?
It's been around for a long time, but yeah, I mean, the whole integration with Twitter and MT4 is really cool, because every time I make a trade, it instantaneously posts it in the account, and so that everybody can follow me. Yeah.
Well,
we actually, if you guys want to join us, we're starting in the room. We're starting a 100 Days of Summer contest, and so the contest is really cool. It's $1,000 real money. You got to buy in with $1,000 real money. You have to make 100 trades minimum. This is to prevent people from just making one trade and sitting on the gains. And you're trading for 100 days, and you have to open up your MyFX book, and then the winner gets lifetime membership to BK, free.
Cool. Nice promo, buddy.
Thank you.
And
so everybody in my room is already excited. They're actually, everybody is not only excited just to trade individually, but everybody wants to team up in teams. Like the Aussies want to go against the Brits and the Americans and everybody else. So
it's like the trading Olympics.
That's right. So we may do trading Olympics as well.
You could use it, man.
Yeah.
So thanks so much, Boris. Thank you so much for coming by today after a long holiday and sharing your view on Euro and teaching us about a volatility candle. And I hope pips rain down on you and Kathy the rest of the year and everyone associated with you.
My pleasure.
Thank you. My birthday trading warrior brother.
Thank you for being with us, Dale. Everybody have a great day.
All right, Boris. Thank you, buddy. Okay, everybody, thank Boris Schlossberg at FX Flow, BK Asset Management. Hope everyone enjoyed Boris. Check them out. I want to thank Nick for coming in today with her crypto review. You too, Ron. Always great to have Nick in here, and Stelios talking about showing that monthly dollar chart. You're welcome.
Thank you. Good to be here, man. Thank you.
And also want to thank Grega for contributing a few charts. Maybe Blake will be back in the saddle tomorrow. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. I count hanging out with you guys every day as a blessing in my life. So enjoy the rest of your spring day. Summer's on its way. Only about 22 days away from the summer solstice. So be careful. It's kind of a choppy week, holiday week, NFP Friday. I'll open early Friday for the NFP. And see everyone tomorrow. I have a great guest tomorrow. He's been on CNBC as well. And he's real bullish on the emerging markets. It's Mark Yusko. So Mark has been on CNBC, and he's real bullish on you too, Diego. Real bullish on emerging markets over developed markets. So I'm going to see if there's a currency component to his thesis. Okay, everyone. Enjoy.